Hi everybody, it's Steven Tasler with Exit Realty, and this is Ask the Expert. Today we've got Dominic DesMarais from Metropolitan Financial Mortgage, and he's here to answer questions about loans. And the question that we're going to talk about today is income and employment, and how do those weigh into a person's ability to get a loan?
Well, the first one, income's a big deal, because one thing we look at is your capacity to be able to repay the loan. That's very important, obviously.
A bank gives you money, they want to get the money back eventually.
You know, it's strange how that works, but that is the way it does work. So we expect people to be able to do that. So we're going to look at your income. A lot of it, though, it's amazing. You don't necessarily need a lot of income to have a nice home.
Mm-hmm.
You know, a household income, $40,000, $50,000, might very well qualify you for a $200,000 purchase if you don't have a lot of other debts that you're responsible for.
Sure.
So to us, it's really about that piece of saying, well, what are the debts? And then what's the income? The nice thing is with the income, which a lot of my clients take advantage of, they will actually do something called a non-occupant co-borrower if they have income issues.
A non-occupant co-borrower?
Yeah, co-borrower,
okay.
Actually.
Co-borrower.
I know how it sounds. But you know what that really is? It's a parent, it's a grandparent, an uncle, an aunt, somebody who's going to co-sign that has a lot more income.
Okay.
And we do that strictly for income purposes. I even have college students that come here to go to the U of M, and they have no income at all, but they can buy a property based on the fact that they have their parents really come in on that loan with them. And it's still their primary residence. Helps their credit, does everything for them, and it's their home to do whatever they want with. So really, with the income, it really depends on a lot of factors, but I like to get to look at that as quick as possible, and then we can analyze. Employment's a whole different situation. We do look for people to have a 2-year employment history. However, we do have government loans. If you're fresh out of college, you're finding a job in the degree that you have, we can finance you almost immediately. And if you have an offer letter from a new company, there's no waiting period. I can actually finance you right away into a different home. So let's say you've relocated here and you really want to get into a home immediately when you come here. If you have that offer letter in hand, we can write you a pre-approval letter assuming you have everything else in order. So both with employment and income, believe it or not, people a lot of times qualify before they think they can.
Excellent. Another question in that regards is that helps with the people that have that 40-hour-a-week job. What about the people that are salespeople, things like that, that are working on commission and their income and their employment is not as steady?
Well, we look at the last 2 years of income taxes is what we do there. And we certainly take all that into account. Now, if you have a self-employed borrower who maybe writes a lot of their income off, what we can actually do, if they got a big down payment, such as 30%, we can actually do an asset-based loan too, but you do have to have a big down payment for that. So there's still a lot of different options. It's amazing. And a lot of people think, oh, I'm not showing much for income, I can't qualify. Sure. That's not necessarily the case.
Excellent. Well, if you have any other questions for us, all of our information are in the comments below. Feel free to give us a call at any time. And again, thank you so much for listening to Ask the Expert, and we'll see you next time. Thanks.
Thank you.